right, what's up? Tim Sykes here, answering student questions, making videos as I answering questions, giving webinars, like multitasking like crazy. First question is from Amy. Tim, I hear you repeat the stat, 90% of traders lose. Do you have any idea what percent of your students succeed? I have zero idea because a lot of students, sign up, but they don't actually study. I will say, if I had to guess, I would say there's probably about, 500 dedicated students, maybe 400 at any one time. It's really not that many. I have thousands of students, but like a gym membership, 90% of people with a gym membership don't actually go to the gym, which is sad. I would say that 90% of students don't actually study. I had that video lesson this morning about my loss, and it's probably my least viewed video lesson in like 6 months because people don't want to think about losses. But I will say that the more you study, the better your odds of success. 30 plus millionaire students, all of them studied a lot. So I don't know exact percentages, but if you do want to fail, then don't study. If you want better odds of success, then study. That's what it comes down to, preparation. You can't, go backwards in your preparation. You can't prepare and trade worse. I know you might feel that way, but it's all helping you go forward. Second question from Anthony, how is it legal for companies like Mark to do that? So in case you don't know, MARK had a press release or a tweet this morning saying that they have this deal with Microsoft, $80 million. And then after hours, the SEC filing came out and they said that they clarified what the $80 million was. Not that it was an $80 million deal, that the customers expected from this partnership are going to use $80 million worth of cloud services, which, how is it legal? I'm not a lawyer, but again, just expect the worst out of these companies and you'll never be disappointed. They find new ways of screwing up all the time. And it's kind of cool. It's scummy, but it's kind of cool to expect the worst and to know that expecting the worst, they'll probably come through. Divinex says, why the breakout levels most of the time are used for big money and even institutional to sell their shares, dumping on retail traders. Great question. You have to understand, institutional investors need to take big positions to make their money worthwhile. Most institutions, it's not even worth their time to trade plays like MARK. But if you are going to trade MARK, for us as little retail traders, I think that it's incredible to buy. Some people will say, why buy, when it's just going to go down eventually, but you don't know when it's going to go down. Okay. So here's the thing with MARK, literally from, the breaking news alert, it was up 175%. And it went up even higher. I think it was actually, this was when MARK went from 35 cents to $1. I think it got up to $1.40. So we're talking 300% gains. That's amazing for a little trader, whether you buy 1,000 shares, 5,000 shares, 10,000 shares. But as an institution where you're trading millions of shares, you're probably not going to expect this much. You're probably not going to be able to size in. So institutions, it makes sense for them to short because they know that MARK will screw up. And the higher this goes, the more it'll come down, either with the toxic financing or what they did with their scumbag tweet. So it's two different games. It's not that short selling is ineffective. It's not that buying is ineffective. You just have to know what you are. Again, even though they put out the SEC filing after hours, you didn't know that the SEC filing was going to come after hours. And if they didn't explain what the $80 million was, this very well could have gone to $2 or $3 before the big crash. So institutions are playing a different game. Even big short sellers are playing a different game. This is why I teach people with small accounts. I teach you small account strategies, and I think going long, Mark is very good for the short term. And I think that, students like, who had a good trade? I retweeted a student. Carlos, 62%, fantastic job. And there was another student. Where was she? Yeah, Jennifer. In at 40 cents, out at 69 cents. This is fantastic. So I think that you can make money long and short, but I think that it's far better for people with small accounts to go long, especially right now. Let's see. Who do I follow? The emails I'm getting or the syllabus? I'm afraid I'll miss something. If you're in the challenge, again, you have access to my whole team. You have multiple mentors. You're not going to miss anything. But if you think that you're somehow not getting some stuff, just send an email to admin@timothysykes.com. The framework works, but how do I identify it earlier? I mean, I never really want to be first with any of these plays. MARK started with the Stocks to Trade breaking news alert with that tweet. That's how you get in early. But you don't have to predict news ahead of time. You don't have to some people say what's going to be the hottest trend of 2024? What's going to be the hottest sector? You don't need to predict this ahead of time. I want you to learn to react rather than predict. If there's 5 stocks that are big percent gainers in one sector in a day, that's the hottest sector. You don't have to guess, I see the storm clouds brewing for AI. I see crypto really benefiting in September. Who cares? These are all guessing games. What is your favorite setup? I love the number 5 morning panic dip buys on multi-day runners because you have 4, 5, 6, 7 days to prepare. The more a stock runs up ahead of time, the higher it goes, the more it can crash, the more it can bounce. But we haven't been seeing that many panic dip buys. Lately, breakouts have been the key. So it doesn't always matter what my favorite setup is. The market will tell you what's working. You have 2 moving targets. Figuring out what works best for you and what works best in the market at any given time. I have questions about stock reverse splits. I recently got burned. I bought before the split and then it sunk. I try to stay away from splits and reverse splits. You can sometimes make quick money, but a lot of brokers don't really account properly for the splits and the reverse splits. So even if the stock is a winner, you might not be able to exit because of your broker, and good luck then trying to fight your broker and be like, I want good service. They're going to be like, shut up, penny stock trader. Just be happy that we're even, willing to work with you. So I try to stay away from that. I recently got burned too, or not recently, but I used to get burned when I tried trading that. Over time, you learn what to focus on and what not to focus on. I really don't like splits or reverse splits. How can you tell a difference between a dip potential from a breakout and a potential panic from the highs? Well, they're different, right? So a dip potential from a breakout, I'm looking for max panic. I'm looking for that blow off top. But again, there's different kinds of dips. MARK, this is a nice panic from $1.50 down to 75 cents, but it's because the whole $80 million thesis got busted. So even though it's a nice panic and a nice 50% drop, which I normally would buy, because it's still up 130% on a joke of a tweet, it's not probably going to bounce. Versus if this stock had been running for 4, 5, 6 days in a row, if they didn't bust their whole thesis, and it just panics 50% because stop losses are getting taken out, that would be a good dip buy. So not all panics are created equal. You really have to look at what causes the panic and how the stocks have been doing in the past. Like I said, whether MARK, screwed people with a misleading tweet or with a toxic financing, there's a long history of them doing this. So if you're not expecting the worst, you're going to be disappointed. How did you learn to cut losses quickly when the natural psychology is to hold and hope? Well, enough big losses and you'll want to change. So, you can follow my rules or you can ignore them. Some people ignore them and I say, you're welcome to ignore any of my rules, but these are rules that I've learned the hard way over 25 plus years. I didn't have anybody teaching me in the beginning. I had to learn them the hard way. And after you have enough big losses and you're just sick to your stomach, you don't want the big losses anymore, you'll learn to cut losses quickly. You want to avoid pain. And if you like pain, then you need a therapist. That's not me. What's the longest you ever watched a stock waiting for your setup? I mean, months, right? Sometimes there's giant pumps. Sometimes it does take a while. There's one right now. What was it? It's less liquid. NRHI. Okay, just to give you a play to watch. This has been, running up for quite a while. Far less liquid than I like. So don't think it's perfect. But you can see here, all month, it's gone from $1 now to $12. The volume is pathetic. But this is a classic pump chart and this will crash. When? I don't know. But that is just one that I'm waiting for. RVSN, when the stock price goes up that much of a short squeeze is the number 5, buying the first green day after a few red days less likely. So again, you have to understand the setup. RVSN was fantastic as a short squeeze yesterday. Very, very difficult to break out on Friday when I thought that it would squeeze. And then you actually had the press release today, right? So, they've had a bunch of press releases, but the big press release was right here, where they revealed their next generation AI for railroads. So, a lot of this is buying the rumor, selling the news. This went up ahead of the news, but then it also didn't tank on the news, and you had one last short squeeze, which was the best spike from 15 to 24 today. Then it tanked. So it's a little bit of an inexact science when there's news, but by and large, buy the rumor, sell the news. You don't want to be there when the news is out. Usually it tanks, even if there's one last squeeze like there was today. What does it take to be more dedicated and disciplined? That's up to you. I go over all these trades. I go over video lessons. I show you successful students, but I can't make you study. I can't make you, follow my rules. Again, don't study, don't follow the rules, and see how crappy you do. Okay? You always have that option. If you go into a trading day unprepared, no watch list, no studying, no comprehension of what we're doing, you're going to miss trades, you're going to be late, you're going to be so confused. So all I can do is give you these lessons and show you what I'm doing, even if I'm not trading perfectly. What are the favorite specialty patterns used by each of your top students? All of the patterns that I teach, okay? A lot of students like holding the, run up, the breakout, like the number 2 and the number 3. Some students like shorting the number 4. A lot of students like dip buying the number 5. Some students like shorting the number 6. Some students do a combination of all of them. But you can go through all of the millionaire students' trades. And the cool thing is, as you're a challenge student, you have access to all the chat room archives. If it were me starting in the challenge, I would be asking 10 to 20 questions every webinar. I'd be so annoying, but that's good because, it shows you want to learn. And secondly, I would go through every single one of my top students' trades and look at what they were saying in chat that day. I know it's a lot of work, but, we have 30 plus people who have done the seemingly impossible. And you have every step of their way, not just their trades. Some people are like, show me your trades. We don't just have trades, we have commentary. Tim Grittani has given 70 plus webinars. When I ask people how many webinars of Tim Grittani have they watched, some people say 5, 10, 20 at most. Most people are like 1 or 2. Why? Stop being part of the 90% of people that don't study. The people that don't study are the ones who lose. This really isn't rocket science, but you got to put in the time. Let's see. I'm struggling to identify when to buy in. I recognize the patterns, but can't pull the trigger. Any recommendations? Yeah, look, a lot of these plays are very choppy, but you just got to go for simple breakouts. If you look at my video lesson today on RVSN, I went over how I was buying this breakout attempt on Friday. I thought it was going to squeeze big. It didn't. I had to lose a little bit. Monday, you had a pre-market spike. That was also a failure. And then right at the open, I wish I wasn't flying at the open on Monday. I 100% would have bought some shares in the 11s and 12s. I probably would have flipped them in the 13s or 14s. But you're looking for simple breakouts over previous highs, okay? PXLW this morning. Look at this. The news was right here. Stocks to Trade breaking news and announced the news, with Disney. Pre-market, you buy the high of the day breakout, 170s, okay? And I was buying it a little late. But I was getting it on this breakout. So use stocks to trade breaking news, put these stocks on your watch list, look at the high of the day, pre-market or during the intraday, and then buy the breakouts. Even MARK, which, has disappointed everybody after hours. I really wish I wasn't sleeping today. Again, sometimes that's just going to get in the way, but whether you have the initial alert from stocks to trade breaking news here, fantastic. Buy the breakout. You're literally not having to guess the news, not having to guess the price action. It's already spiked. The news is already out, and you just buy the breakout. You have the first breakout here at 50 cents. You have another breakout here at 80 cents. You have another big breakout here at $1. Okay? You're buying the high of the day breakouts. It's really that simple. I've done, 3 video lessons this week on buying high of the day breakouts. Let's see. For small accounts, you need to be mostly right than wrong to grow the account exponentially than having a big account to get used to see who was wrong or with isn't. What? For small accounts, you need to be mostly right. I mean, again, like you can have a 20% win rate if your wins are like 5 times the size of your losses. You don't have to be right the majority of the time. I mean, Jack Kellogg is right like 56% of the time. I think Andrew, one of the latest new millionaire students, he's right like 40% of the time. It's all about having bigger gains than losses. It's not always having a 60, 70, 80% win rate. When I trade a small account, I'm successful 75% of the time, but when I size up even a little bit, I hold too long. Any suggestions or just stay small until size is comfortable? Keep pushing your limits, right? Like if you were working out and you're trying to achieve a weight where you're like lifting, 35-pound dumbbells, and you can almost do it, but you keep lifting, you keep getting stronger, then eventually you can rise up. Do more reps, lift higher weight. Or like if you're a marathon runner and you keep trying to like have a faster score, or if you're a sprinter and you're trying to get faster. It's all a process. And if you feel like you're, sizing up too much and you're getting scared, size back down. It's not always just going forward. Sometimes you have to take a step back, to size down. Sometimes you have to miss a trade. And then you get so angry missing a trade that you're more pumped up to nail the next trade. It's pretty crazy how it works, but that's the reality of the situation. The whole key is keeping the process going, always trying to do better, being introspective about your wins and your losses, recognizing when, you're sizing up too much, like you get too stressed. Like the 12 grand that I made, this month, this is a fantastic month for me, not in terms of performance. I think I could have done better, but given how much I've been traveling, given how choppy these stocks are, and you look at my trades, I'm trading very small, trying to make 500 or $1,000. So I've sized down because of the market and because of what works for me. I've zeroed in on that sweet spot. You have to find your sweet spot. It's not just about making a lot. I talk about my millionaire students, but I have a lot of students who are just happy just to make an extra few grand a month. They're never going to be millionaires using my strategy. But who doesn't want an extra few hundred or a few $1,000s if you can wait for these ideal plays? Miguel says, Tim, what tools have you used when you were a hedge fund manager, as there are bank global research accounts which are only for institutional accounts? So there's a lot of conspiracy theories out there that like the rich and the elite have all this stuff that regular people don't have, and like the rich get richer and the poor get poorer. You guys all have access to the best tools ever. Okay? I didn't have stocks to trade. I didn't have stocks to trade breaking news. I had to, find all the news myself. I was looking at a million different news wires. I was looking at all over social media. I was looking at all over for SEC filings. You have it so much easier. Stocks to trade is institutional grade research. Stocks to trade breaking news is put out by 2 guys with 25 years hedge fund experience. You have all the tools you need. You have millionaires, self-made millionaires, maybe not with much institutional background, but the people who mentor in the challenge have done the seemingly impossible. So don't worry about the institutions. Don't worry about the hedge funds. Stop believing conspiracy theories. Focus on your own journey, okay? I really think that this is a lesson that applies to so many people. Everyone wants to trade with a big account. Everyone wants to have what they don't have. You really need to get introspective about your own journey and feel grateful that, the challenge is the place that has all the tools, all the experience, and all the archives. Not enough of you are watching archive webinars, going through my millionaire students archive trades, going through the archive chats. You have endless data and knowledge in the challenge umbrella. You just got to use it, That's really what it comes down to. There's no secret stuff on Wall Street. Never forget, 70% of mutual fund managers don't even beat the S&P 500. The mutual fund industry is a multi-trillion-dollar industry, and it can't even go up 8 to 10% per year on average. Think about that. This whole industry, whether it's prop firms or hedge funds or institutions or analysts who are right 35% of the time, it's all BS, okay? It's crazy how much BS is in this industry. You're not missing out. You just have to utilize the tools and the information that you have access to.